Welcome to a special episode of Prof G Markets. Today, we're speaking with Mike Novogratz, founder and CEO of Galaxy Investment Partners, on the state of play in the cryptocurrency market and what's in store. I like Mike. I've known him for a few years now. I find him to be thoughtful. If he goes down, I'm going to be really disappointed in this space because he strikes me as a high integrity guy, served his country, seems just like very level-headed, and I don't know, seems to be one of the people that's going to emerge from this fire with dragons under his arm. Anyways, with that, enjoy our conversation with Mike Novogratz. Mike, where does this podcast find you?
I am in New York City, having flown home on the red eye from LA.
Nice. So let's bust right into it. You're a longtime Bitcoin bull, and Bitcoin was up 73% in the first quarter of 2023. That's versus the NASDAQ up 17%, gold 9%. I think the S&P was up 7%. Walk us through what you think the underlying dynamics were around this, this pretty serious recovery.
Well, I think, we started in the hole. We started in the hole for good reasons, right? Sam Bankman-Fried and FTX really dented people's trust in the whole crypto ecosystem. The Fed raising rates as aggressive as they did. Bitcoin was supposed to come down last year, right? If it's a report card on financial stewardship, Chairman Powell looked like a really serious central banker. And so you put those two things together, probably overshot. And by the end of the year, there was such paranoia and fear around the whole crypto ecosystem, and Bitcoin included, that anyone who needed to sold probably already sold. And there was a lot of leverage shorts. And so, when markets can't go down, they go up. Right. And a combination of the Chinese, after Xi's, there was a big protest when Xi kind of doubled down on COVID zero, and people had that, that white envelope protest, or maybe it was the manila envelope protest. Xi pivoted away from COVID zero real quickly, but he also backed away from Chinese tech. And so the Chinese crypto people felt a lot more comfortable. You also have Chinese tourism. And so all of a sudden you started seeing Asian crypto and retail coming back in. Some macro hedge funds here in the US. It didn't take a lot to start moving prices because people were so bearish. And then we got the real acceleration when, you woke up in first Silvergate, then, Silicon Valley Bank. And it was really the Silicon Valley Bank, Thursday, Friday weekend where people were like, oh my goodness, here we go again. Right. And that quantitative tightening, or the shrinking of the Fed's balance sheet, reversed itself at stunning pace. And so the whole reason for crypto, or for Bitcoin specifically, which was this hard asset hedge against the debasement of fiat, kind of got regalvanized. People are like, oh, the governments, even if they're trying to get out of this debt trap, right? We had this debt orgy, are going to have a really hard time doing it without printing their way out. And so that story lifted Bitcoin pretty aggressively. And I'd say the last thing, which is counterintuitive but real, is that the U.S. government is on a jihad against crypto. This is the Biden administration and, a few Democratic senators, Elizabeth Warren, Sherrod Brown. And Bitcoin started as a movement where people didn't trust the center, didn't trust governments. And so when you have what feels like an unfair application of the rules, right? Signature Bank being closed down and Republic not being closed down because Signature was allegedly a crypto bank. That gets people angry. And so that anger incites the Bitcoin community. And so this is really, in lots of ways, the crypto community coming roaring back. It's not the state of Wisconsin buying Bitcoin. It's, retail and overseas crypto coming back with the addition of a few hedge funds. And, I like gold going a lot higher here. Gold's going to take out 2,000 and you'll be at 3,000 in a year. Bitcoin is digital gold, same thing. We're going to take out 28,500. We're going to go a lot higher by the end of the year.
So a lot there. So
I'll try to make my next answer shorter.
No, I thought that was great. Let's talk about the fiat currency, and I should put my bias up front. I'm on the board of a crypto hardware storage company called Ledger because I wanted to learn about the space, but I'm a no-coiner. And one of the phenomena that struck me about the SVB run was that there appears to be, and tell me if you agree with this, but a group of people who have such huge investments, including entire venture capital funds and Web3 and Bitcoin, that they have a vested interest in the decline of the dollar and the decline of the U.S. banking system. And I look at someone like Mike Novogratz. You've served your country. And the people who are most loyal to the U.S. are its veterans. Do you worry that we have a group of people who are very deep-pocketed, have very large influential platforms, and go on Twitter and catastrophize around hyperinflation or bank runs because they have large investments and assets that go up when the U.S. banking system all of a sudden shows that it might fail? In other words, is one of the most exciting asset classes a bet against America? And is there a problem with that?
Yeah, it's a great question. I have probably been quoted 15 times saying, I go to bed every night saying, two Our Fathers and one Hail Mary as an ex-Catholic, that the stewardship of the U.S. economy stays strong. Mm-hmm. I don't want Bitcoin to go to 1 million anytime soon. Mm-hmm. I think Bitcoin in particular is a report card about the stewardship of our government. And I think what Satoshi saw originally was populism, mm-hmm. right? That you get to a point where you've got populist governments that just can't help themselves by spending more than they can tax, mm-hmm. they can bring in. And we might be at the point of a really difficult place to return from without at least having some inflating away the debt. And so I always thought Bitcoin was a very good hedge to that portfolio. But as a guy who served the country, the last thing I want is, listen, Bitcoin going 1 million, we've got instability, we lose civil society, and we're all screwed. And so, when guys like Balaji, say, I'll bet you Bitcoin's at 1 million, for effect, it drives me crazy because I think it also really infuriates the people at Treasury, Lael Brainerd, Janet Yellen. I think, Lael's not at Treasury, but she's in the White House. I think while the dollar is under attack elsewhere, it doesn't help. And, when you want the regulators on your side, not in your face. And again, I don't know if they're doing it so commercially, like let's scare people so our investments go up, mm-hmm. Or if it's just that's the DNA of their. Maybe I'm not cynical enough to think that this is a pump scheme, but I do get your point, and I've been very careful myself to not be dramatic. Listen, like I told you earlier, I think gold's going to go higher for a bunch of reasons, the same reasons as like Bitcoin, because I do think we're in this very hard fiscal position, not just us, but the whole world. And I do think the geopolitics of the moment are so difficult. Saudi is not going to break the peg to the U.S. dollar, period, end of story. But they are, giving lip service and going to trade renminbi. You can trade oil in renminbi, and there's talk of a BRICS currency. All that stuff undermines the hegemony of the dollar as a reserve currency. Again, one reason gold goes up, one reason Bitcoin goes up. And so I think those things are happening despite, crypto is less than $1 trillion asset class. Mm-hmm. Literally, it's a pimple on the elephant's butt in some ways.
Yeah, it's interesting because if you think about, you mentioned anger, that there's a lot of anger among the crypto community, and they kind of came back with a vengeance and pushed these assets higher. And when I think of anger, I think there's got to be a lot of retail investors that came in the last year because a lot of very smart people with very big platforms were talking about this was going to solve a lot of problems, and there was the mother of all FOMO. And I mean, a lot of these things didn't go, a lot of these tokens, and you're involved in a couple of them or were involved, they didn't go down 30%. They went down 100%. And it wasn't like, oh, it's down 10%. I'm old. I need to rethink my strategy. I'm going to get out. It was like, that's like that South Park episode where the kid comes in with $100. It's like, okay, and your money's gone.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
I mean, it strikes me that the regulators have showed up too late, and that the anger out there is a lot of people that feel like they were fooled by people much smarter than them. What are your thoughts?
Listen, whenever you have a new asset class, there are shysters involved, there are experiments involved, there are fraudsters involved. And I think 2022 was a year where it was shocking how much of that happened.
Yeah.
It was literally shocking. It seemed like over half the industry, I'd get a call from a friend who was like, is there anyone legitimate to deal with? I do think most of that is being washed away. And, crypto, it's interesting because if you go into it knowing it's a volatile asset class, right? Bitcoin now is about a 60 vol asset, same with Ethereum, but they were 100 vol assets last year. When I volatility adjust, so I look at the amount of risk taken for, one unit, Ethereum and then Bitcoin have been the best investment in the world, vol adjusted even, over 3 years, 2 years, 6 months, and 3 months. And so it's not as risky as it looks if you take the right position sizing. It doesn't mean you put your whole net worth into it.
Yep.
But on a Sharpe ratio basis, it's been better than JP Morgan, better than Google, better than Tesla, better than just about any asset. And so why is that? It's because it's being adopted, right? And this adoption curve is pretty relentless. There were plenty of tokens, right? We were involved with, the Luna ecosystem, which went to zero. And now the guy is under indictment. We'll see what comes of that. That was on its face a blockchain that looked really promising, that was getting a lot of usage because they had an algorithmic stable coin on top of it that drew people in because they were giving huge returns, 18% returns. And so, and it was an experiment that failed. It was, I think, a wake-up call to people on how fast some of these newer technologies some of the new token ecosystems can unravel. But when you look at Bitcoin now, 13, 14 years going, Ethereum, 8 years, there are a lot more stability to those ecosystems. And so I think you're starting to see people say, hey, with the right amount of my capital in here, they are pretty safe places.
So I ask this question generally as a question, not as a comment, but I look at crypto and I think the genius of Bitcoin is that consumers or the world believes that there's actual scarcity value, that it has the discipline that at 21 million coins they stop mining. And people have lost that credibility, or fiat currencies have lost that scarcity credibility. And I can see why that has value. It's sort of immutable. And then Ethereum is very mutable, if you will. And there seems to be a lot of utility, people minting and mining and figuring out ways that to produce NFTs or digital assets that may or may not have value. And then I can't see the value in anything else. And that's not to say it's not there, but it literally just feels like trading baseball cards until they all go to zero. Make the case, or do you want to make the case for anything outside of Bitcoin and Ethereum?
Well, listen, our portfolio is right now really stacked to Bitcoin and Ethereum, but we have a bunch of venture bets on other ecosystems. The hard part is when you're putting new technologies, it takes a long time for them to be adapted, right? And so if you can dream about a world where more and more of our data is held on public blockchains, then Lido, which is a staking coin for the Ethereum project. So if you're going to own Ethereum because you're going to have stuff on a public blockchain, you're going to want to get paid the interest on Ethereum. And so you can do that in a decentralized way in a token called Lido. So if you believe Ethereum is going to keep growing, then the Lido token probably makes some sense. And so there are other blockchains that will, Polygon is a blockchain that will mostly be using the Ethereum as a base layer protocol that's processing lots of gaming stuff. And as more and more value gets transferred in advertising and gaming and NFTs, it's going to have to happen on a blockchain that's a lot faster than Ethereum is. And so you'll put together this web of databases, right? If you think about blockchains, they're literally just Microsoft Excel spreadsheets that are shared and can't be changed. And some run faster than others. When I think of AI, like in some ways, AI is going to be the ultimate use case for crypto and for blockchains because, how do I know I'm talking to Scott Galloway even and it's not a deep fake Scott Galloway? You're going to have this authentication process. And once we really get digital identity down in the crypto space and it's not there, but it's getting closer, I do think a lot of, authentication in normal data is going to happen in some form of crypto blockchain ecosystem. It's ironic to me that, Gensler just asked for a bunch more money to try to regulate crypto more. And no one's at all talking about regulating AI. It seems like they have it backwards.
Well, they're actually, I don't know if I'm sure you saw the letter. They're actually talking about pausing it, or there are a bunch of people who said, let's try and pause it. But under the auspices of me being a boomer no coiner, I can see the utility of Bitcoin. I can see sort of the utility of Ethereum. I have trouble seeing the use case across any of this. And my general...
Well, some of the other use cases is interesting. So I learned my lesson the hard way. I early on gave the Litecoin community a lot of shit, right? I said, Litecoin is a test net for Bitcoin. And the people that cared about Litecoin got so angry at me. And, at times I even got death threats from some of these communities. And I started trying to understand, what Bitcoin really is at its core, it's 190 million people around the world that have decided that they will take some of their hard-earned wealth and store it in this community, which is got a constitution, right, that's written in, right, the Bitcoin white paper, and is governed by code in lots of ways. But it's code plus people, right, that they're storing their wealth in this community. In a smaller version, that's what Litecoin is doing or Dogecoin is doing. It's an identity, but it's a trust that community. And why they're so hard to put down is there is this incentive for Litecoiners, whatever that frickin' means, to bring friends and relatives and other people into that Litecoin community to store wealth. And so what I used to be, and trust me, the lion's share of Galaxy's crypto is in Bitcoin and Ethereum. I used to think all those Litecoin is going to zero. And now I think, no, it'll have a resilient community. I don't think it will be adopted nearly as fast as the others, but it's starting from a smaller base. And, even Cardano, which I thought was built on, junk tech, and, I got a lot of hell for that. The Cardano community is fierce. And I'm sure just saying that on your podcast, I will literally probably get a death threat. So there's a religious fervor, partly because you think about the economic incentive. If I badmouth one of these things and it goes down, it costs people money. And if I praise one and it goes up, they make money. And that's not because of Mike Novogratz saying it's because more people joining their community. And so in some ways, I remember my mother sold Tupperware. It was the more people that bought Tupperware. Now they had a product, but it's it is multi-level marketing in some ways. It's bringing people in to trust. And so you have to have a story that's really trustworthy. Bitcoin really has a very honed out story and a technology that's trustworthy.
So
but it's surprising me how resilient these other places are.
Tupperware keeps food fresh, right? There's utility there.
Yeah.
Bitcoin, it seems like it might establish itself as an enduring store of value. We talked about the utility of Ethereum.
But I guess these other things are stores of value too. And it doesn't make as much intuitive sense that you could have multiple stores of value, but in smaller communities, they are deciding to store value there.
Well, but the only way you create a store of value is if there's some scarcity credibility. What I want to pick up on is I've experienced some of this, what I call crypto Taliban-like religious fervor. And I find that it's not, I wonder how much of it is belief in the underlying technology or anger that you would threaten the momentum of their, quite frankly, shitcoin before they have a chance to get out. And that there seems to be a culture of intimidation and pumping, and I would imagine dumping, as opposed to any honest conversation around what is the underlying utility of this thing? How does this coin and this technology actually justify a $200, $700 million market cap, which is the market cap of companies that are producing goods and actually adding utility?
Yeah. So I think what's interesting is if you look at gold as a 10 trillion growing to 15 trillion asset class, right, which is just no utility other than store of value. You can wear your store of value in cool jewelry, but the bulk of it is stored in vaults. And you look at other stores of value, often fiat currency, the TAM is huge. And so I'm starting to think, and again, I haven't invested a lot, that these micro communities, because they have this fervor, they don't need as much utility. What's interesting is they're more hackable, right? They're not nearly as secure, right? Because they don't have as much, as many nodes or as many people staking or as many, from Bitcoin's case, as much, energy being used to secure the network. But there is a group that use them. Now, there's also some that have utility, like the Tron network, where, Justin Sun runs Tron. It is a very fast blockchain. It's not real decentralized. I would bet Justin controls most of the nodes of his own blockchain. So it's really a database. It's used all the time in Africa and the Mideast to transfer money. So the way, workers in Dubai are sending money back and forth is micropayments they're using Tether on Tron. Tether is a stable coin that looks like the dollar. And they move it around on Tron at small amounts of money. And so that's got a utility. Just the fees alone from running that database, he, generates about $300 million a year to the guy who runs the database. And so, again, we don't see a lot of this in the U.S. because, Apple Pay works pretty goddamn well.
Yeah, and the dollar still does work, right? The USD is still a pretty good technology and currency.
And our digital system's already working pretty well internally. But overseas, there's a lot more adoption of some of these more famous.
Well, if you're in Argentina, you don't want to hold pesos, right? And if there's currency controls, I would imagine that a cryptocurrency, you're willing to absorb that volatility to just get out of a system you don't trust. I'm just curious to get I kind of want to say SBF ? Your turn. Like, what happened there? Did you see this coming? Like, what can be learned from this? What do you think happens to him?
Yeah, I think he spends a lot of time in jail.
Yeah.
And I think it's deserved. In lots of ways, he snookered the world with, the good education, the parents that were well educated, working at Jane Street. Jane Street's one of the world's best quantitative trading shops. And so that's like coming from Goldman Sachs. You get that credentialization real fast. He was making money in arbitrage. There were lots of people doing it. So that made intuitive sense to people. And he started this thing at the right time and then got, Sequoia and Paradigm to give them their impromptu, and then no one did any homework. We didn't invest. I remember, Sam, in our offices, we looked at that round that ended up being a $9 billion round, but we thought it should have been a $1 billion round, and just couldn't get there. And so didn't invest. But we were users of his exchange. And I tell you, I was always frustrated that he was able to have a proprietary trading shop and an exchange side by side, and certainly had the suspicion that there was some Swiss cheese walls in between in terms of information flow. It never would have dawned on me that he was stealing my money. And so I thought he was front running me, and that was the cost to pay sometimes, because that's where lots of the liquidity was in the derivative market. I couldn't prove it, but it was an intuition. But I never really thought, he'd be stealing the money. And I guess the one thing that I kick myself in the rear for is after the Luna thing went down and Sam started bailing everyone out, I kept asking the question, where's he getting all this money? I knew he had spent $1 billion on mining. I knew he had spent $3 or $4 billion or whatever the number was buying his stake back from CZ. And I was like, I don't care how. And instead of actually digging in, maybe there's a great lesson in life. I think it's for males probably do this more than females. I answered the question in my own head. Instead of actually digging and getting the real answer, I was like, oh, he must have owned more Solana than I thought and sold it at the high. He must have made money yield farming. And I just didn't dig in deep enough to have, here's all his spending and where was the revenue coming from. And so, we lost, this is public, $75 million on his exchange, just because there was money in our accounts and we traded pretty actively. And so that was not a pleasant day.
Doesn't it feel like, and I want to be clear, I didn't see it. I remember at one point actually thinking, he's so involved in everything and the entire asset class seems to be imploding, and yet he's doing fine. It just seemed almost impossible that he would have his fingers in everything. And while this asset class is going from 3 trillion to 1 trillion, he would still be fine. It didn't make any sense to me. But again, I wish I'd been more thoughtful about, if you think about, obviously, hindsight, the red flags, no board of directors, no audited financials, incorporating in the Bahamas, a trading platform and a private equity firm. It just feels like there were red flags the size of Kansas everywhere.
There were thousands of them. And he really, you don't meet many sociopaths in your life. I was with him 3 weeks before at the Robinhood, gathering.
Gala, yeah.
He was on stage with Larry Fink, and I was talking to him and Larry before they went on stage. And, there was not a bead of sweat on his head.
It's crazy, isn't it?
And that's what sociopaths, there's zero empathy. And I think with hindsight, the whole, give all your money away was just a ruse.
It's a distraction.
Yeah.
It was a distraction. I want to move on. What do you, when I think of what's advertised around crypto is you don't need trust and you don't need middleware or middle people. Should Coinbase exist?
Well, yeah, listen, companies like Coinbase are really important for the ecosystem, and ours as well, I think, in that the real early adopters don't need it, right? The real crypto junkies are going to live in a Web3 decentralized world, and once they get their money in. But just Coinbase deserves a huge amount of thanks from the crypto community just for all the people they on-ramped in. Right? You've got to get your fiat into the crypto world, and you've got to do it if you don't want to, potentially go to jail, through some legitimate place. And so how you get your money into crypto is important. And Coinbase has done a lot of that heavy lifting. But more importantly, we're not going to go from a TradeFi world where most of the wealth is owned by people over 50 to a all online digital utopia anytime real soon. And so this long bridging of where we are to where we're going is where Galaxy and Coinbase and other companies that live in between TradeFi and this new ecosystem exist. And I think there's a real purpose for our company and for theirs. It's hard because you're playing within the regulatory framework that's undefined in the U.S. And so you're trying to, be the last thing I want to do is go to jail, right? So you're trying to play by all the rules. The rules aren't defined. In some ways, it would have been much easier being all offshore and just doing crypto. But I do think the way these technologies benefit the United States and the world is an integration with our existing ecosystem. I have a friend who's quite prominent in crypto who says, hey, kind of like, that's original question. The legacy systems are end of lifing and they're just going to all break and we're going to be there and we're going to be the new system. I just fundamentally don't want that to happen and don't believe that will happen. And so we're trying to kind of be a well-behaved bridge in between these systems. But I tell you, it's not an easy place to operate.
We probably should have started with this question, but describe Galaxy and its business model.
Well, we are a company with three main business lines. We have a sales and trading business, like almost what you'd find at a bank. So we buy and sell tokens from institutions and high net worth families. We lend against them. So we have a lending business. We have derivatives. So you can buy and sell options or structured products. We trade with about 900 counterparties. And so in order to get that liquidity, we have an architecture that trades with all the exchanges in the world, or most of them, that we could feel comfortable with to be able to access liquidity to give to customers. We have an asset management business where we manage other people's money. And then we have an infrastructure business where we do Bitcoin mining and we're starting to do staking, some market making as a service offshore. And we did that with originally using most of our money, which started as my money, and then we raised some money investing in the space. And so we've got a balance sheet that's close to $1.65 billion, that didn't start there, that got higher and then lower. And so we've eaten our own cooking and have funded the company mostly through profits of trading and investing. The idea is, as more and more institutions move into the space, we become their trusted partner. And that had lots of momentum. Sam Bankman-Fried, set that back. But we're seeing that, we're getting a larger share of a smaller pie because Genesis and BlockFi and Voyager and most of our competitors went out of business.
What is the core business? Most businesses have a business that pays for the bills and then a growth business. Like which of your businesses, though?
It's the trading business, right? And so the day of Silicon Valley Bank, that weekend, we had our busiest weekend, providing liquidities, staying engaged 24 hours a day, buying and selling, tokens for the community.
When you say for the community, are you trading your own account or are you managing other people's money?
We do both.
Right.
Our managing other people's money, you have to have a lot of money to make a lot of money on it, right? The asset management business is all about scale. Ours is about $2+ billion. And so it's not a huge generator yet. And so most of the money we make is trading our money, but also making prices for customers. And so customer ABC wants to sell Bitcoin or buy options on it or sell USDC. We'll
you make a market in it.
Might make a market in it.
And have you seen a compression in fees as you make a market, or the fees gone back up again given the volatility?
There was a compression pre-SBF, but with Genesis going out of business and all these other guys going out of business, Genesis is not out of business. They're just in a much reduced state. That the spreads have widened back out some.
So I don't know you well, but I know you, and you strike me as a fairly. If you end up being one of these sociopaths, I'm going to be blown away because you strike me as a pretty empathetic guy. I've seen you out. I know you're into country, and you have wonderful siblings and value family. How has this been on you, like emotionally and mentally? I can't imagine you weren't on the wrong end of some of this anger with what happened to Terra and Luna. And I mean, you are right in. I mean, you're in the combat zone here. How has this been for you?
In some ways, I became the unofficial spokesman early on for the institutional part of this business. At one point, we had some analysis that I was 50% of all the media, of the whole space. And so it was a life-changing thing in that I would walk around Miami and everyone stops and asks for a selfie. That was weird because even as a hedge fund manager, no one knows who you are. Yeah. But it comes with some responsibility of trying to, be a sober, measured voice. Luna was a painful one in that, and you learn lessons about how immature the market is, right? We bought Luna at 23 cents or something. And I remember talking about it on a podcast at one point.
What did it peak at?
$130.
So up about 600, up about 650x?
Yeah, whatever, right? And so all within 18 months. Like I've never seen an investment like that. Yeah. And so the way I have risk managed my whole life is something goes up, you sell a little bit, it goes up more, you sell a little bit, it goes up more, which is very non-venture, right? The venture guys never want to sell anything. And so for me, it's a very different investment at 50 than it was at 10. And at 100, it's there are animal spirits that get involved. And so I've always advocated risk management and having a trading, view to it. When Luna collapsed, we certainly lost some money on Luna in 2022. But as a whole, it was a very profitable trade. And the sting of others losing lots was real. My Twitter went from being well-liked to less well-liked. Yeah. And, the balancing how much you say, because none of our clients are retail, right? Our clients are all institutional. And so my Twitter profile or my personality was mostly because I was trying to give, my thoughts and as an overall spokesman, almost an industry spokesman, more so than a company spokesman. And I'm a little more cautious because of the experience. I would tell you that, again, I did the work on Bitcoin and Ethereum. They literally have been the best risk-adjusted investment almost over any time period. You can pick one when they're on their lows, when they go to their lows. And so like over 1 year, they don't look as great. But 3 months, 6 months, 2 years, 4 years, 3 years, they've been great investments. And so in some ways, you feel good about getting people in. What I've learned is it's easy to get people in. It's hard to get them out. Like even friends. When I said, guys, you got to sell your stuff, no one ever pays attention.
Literally the most stressful times of my life have been losing other people's money. It just blows. So a few weeks ago, the CFTC sued crypto exchange Binance for illegally operating in the U.S. And within 24 hours of that news, Binance saw almost $2 billion in withdrawals. Do you think Binance is kind of is in danger of a liquidity crisis?
I don't. Listen, we don't know what else is coming from Department of Justice or any of the other regulators in the U.S. My broad framework is that lots of crypto companies, BitMEX with Arthur Hayes, when they started, the ethos was screw the government. And so there was very, very lax KYC in a lot of these companies. KYC, know your customer. And that as they realized they had these very profitable businesses and they needed to operate in the real world, they quickly tried to pivot to a much cleaner operating environment, and that either regulators are going to go after them for sins of the past, or they're going to end up paying big fines and saying, okay, that was then, but now we operate compliantly. Mm-hmm. And I think that's what's at stake here with Binance. Crypto is mostly offshore, mm-hmm. and Binance is the lion's share of their assets are offshore. And there's kind of an anti-US regulator feel in the offshore crypto community, right? So if you go to Abu Dhabi or Dubai, where Binance is headquartered, mm-hmm. CZ walks around like a rock star. He's got a French passport, and they've set up regulatory compliant in France. And so I kind of think most of the money that was going to come out would have come out after FTX, right? A lot of people thought that Binance was next. I actually flew over to Abu Dhabi like 2 days later and interviewed him because I wanted to meet him actually and understand, like, I had money at stake, look him in the eye and make sure there was another sociopath. And again, my sociopath meter isn't perfect, mm-hmm. but, he felt like he was a Canadian, pretty straightforward, answered all my questions. Again, I have no idea how he'll fare in these suits, but if you look, it's mostly stuff done pre-2020. And I'm guessing it's just kind of Occam's razor. When you're making that much money, why would you take any stupid risks unless mm-hmm. you really are deranged? And I don't think he is. And so my guess is he's trying to pay for the sins of the past and negotiate himself because he that exchange is 75% of the liquidity of the market right now. It's a dominant player.
Yeah, I was thinking, like, when you, again, hindsight, but we look at Sam Bankman-Fried and we look at FTX and Do Kwon at Terra Luna, who my understanding is just been arrested. Like, what can be learned about spotting this stuff? It feels like, all right, shouldn't we be smarter the next time? Is it that whenever you have an asset class that's kind of mostly unregulated and has this sort of mania, you're going to have bad actors? Or is it?
Well, again, some of this is risk management in an mm-hmm. environment when rates went to zero and no one understood what value was.
Yeah, but you don't go to jail for poor risk management. I mean, Greg Becker lost a lot. I don't think he's going to jail.
Right. And some of it is there were a lot of young guys that got into an unregulated industry mm-hmm. and didn't know how to. It's interesting. There are very few Wall Streeters. I think of Chad Pascarilla at Paxos mm-hmm. that haven't run tight shops. Now he's gotten a Wells notice from the SEC. My guess is, I'd bet on Chad in that case because I just know the guy. He's just a very straight, ran his business the way you'd want to run a business.
This is Coinbase, right?
No, this is Paxos.
Oh, excuse me. Because Coinbase also got a Wells notice, right?
Yep. And listen, you read that, and we'll see how this plays out. There again, I'm not behind the curtain in any of these places, mm-hmm. but it feels like there's a regulatory onslaught. The crypto community has been saying for years, "Geez, we wish you would tell us what the rules are," and the SEC has been saying, "Just come to us and register," which is an impossibility because there's no qualified custodians, and so it's this circular game. And so the crypto community broadly said, okay, we don't think these are securities. This is the process that we go through to determine that they're not securities. And mm-hmm. then we're going to operate, as such. And that, it's been 5 years, 6 years, 7 years since some of these tokens have been going, and the SEC has been watching them trade. And so it feels quite disingenuous for them to come now and say, oh, by the way, you should have known 6, 7 years ago. We could have told you what we decided not to tell you 6, 7 years ago, 5 years ago, 4 years ago, 3 years ago, 2 years ago, 1 year ago, right? The SEC is in a really weird place here mm-hmm. because, again, this is not something that showed up 3 months ago, right? And so I think one of the crypto hopes in the U.S. is that the judiciary is less political than the the SEC and the Biden administration, and will be more fair in how they determine right and wrong. But it's not clear. It's not clear that, like, listen, Sam Bankman-Fried, it's clear as can be, he stole people's money. Read the Wells notice in Paxos, and there is absolutely nothing clear that Chad Pasquarella and his team did anything wrong.
Yeah, it feels as, again, from someone who's sort of straddling the line, mostly as an outsider, the SEC and regulation, I feel like it's a day late and a dollar short. And what you're saying is they might be overcorrecting. Is that accurate?
I think the amount of egg that the Biden administration, and listen, I'm a lifelong Democrat, a supporter of democratic politics, of progressive politics, quite frankly. So I'm in this awkward place that, my team is behaving in a way that I don't feel is rational or fair. Sam was the biggest donor in the midterms to tons of Democrats. Sam was the favored child at both the CFTC and the SEC, right? I haven't had one meeting with Gary Gensler at the SEC. And Gary is an ex-partner of mine from Goldman Sachs and a guy that I'm friendly with and that I spoke to right before he took the job and taught one of his classes when he taught at MIT. Right? So Sam had this privy position, and then he turns out to be the biggest fraud. And I think they just have so much egg on their face that they're overcorrecting. But the administration, there's some reason Elizabeth Warren really doesn't like crypto, and Gary's very close to Elizabeth. They're very influential in Biden, economic policies. And so you put it together, and it's a really bad environment for crypto. I think it's a terrible decision from their perspective. There are 50 million Americans that care a lot about crypto. Some religiously care about it. Some just like it. They're voters. And so, pre-Sam, there was a bipartisan movement happening. I was in D.C. and we hosted the Black Blockchain Alliance or caucus. And from Cory Booker to Senator Gillibrand to you name them, there were plenty of people, Senator Haggerty, that were very pro-crypto, that were working on bills to get some rules around this thing. And post-Sam, it just became toxic for Democrats.
Well, it also feels like, and I'll ask you this as a question, like, okay, so you're clearly a spokesperson or someone who's, quite frankly, one of the last men standing, for lack of a better term. If you see or you feel some obligation for both the community and out of just self-preservation to rejuvenate the brand of crypto or Web3, it feels like the brand has really taken multiple hits from multiple directions. You got criminality. You got a lot of people on Main Street who have lost a lot of money. You got, you got, quite frankly, the technology. I would argue that most people would think it hasn't lived up to the hype. And like Bill Gates says, stuff that's supposed to take 3 years takes 10, and stuff that's supposed to take 10 takes 3. This definitely feels like the former. The whole thing feels a little bit, not a little bit, it feels very sketchy. And it feels like a little bit of I think a lot of people think it's just a levered Ponzi scheme. How do you restore faith to the sector such that it becomes an enduring asset class?
I guess slowly with work. I tweeted out Elizabeth Warren, and maybe I shouldn't have, because she was saying, well, it's only value as people think it's got value, and like art's like that, but you can throw darts at art. And I was like, well, who throws darts at art to start with? I collect art. You would never throw a dart at it. There are a lot of smart people that believe in Bitcoin.
Agreed.
From Abby Johnson and Pete Brigger and like guys that run huge investment businesses. Bill Miller from Old Leg Basic guy. That it's not like these are all crazy people, right? They see what's happening with global financial systems and finances and say, I want digital gold. And they see their kids spending 12 hours a day on their phone instead of 4 hours a day. And they say, in the future, we're all going to be digital. We're just going to spend more and more time in the metaverse or whatever you want to call the digital realm. And so having a digital store of value makes sense to people. Now, it might not make sense to everybody, but if you think about Bitcoin Nation, it's already bigger than the country of Russia, right? It's the 7th largest country on earth that people that care about Bitcoin. It's the most distributed asset literally in history outside of the dollar or other currencies. And so this story has connected with people, and I don't think that goes away. The technology piece. So Bitcoin is a finished technology. That's what's kind of interesting about it. Ethereum isn't close to a finished technology. It's not fast enough to process what it needs to be. And the world isn't comfortable with trusting blockchains yet. But Scott, if you think about data and why our data is important, 50 years ago, we didn't have very much digital data, if any, right? And so no one cared so much about your data. Our data has become so much more important because it's manipulated, it's digital, and it's only going to get more important. So who controls the data is really important. Listen, we have a country where 40% think Trump can do no wrong and 60% think he can do no right and he could become the president. Or I talked about this in Brazil. They were talking about having a CBDC, central bank issued digital currency. And the original plan was the central bank was to get all the data, just like China. And I said, well, listen, you're gay in Brazil. Just Google Bolsonaro gay. He really doesn't like gay people. Matter of fact, he hates gay people. They deserve to exist. So if you're gay in Brazil and your government has access to every last thing that you buy, that would scare the shit out of me. And so how we start thinking about data privacy, and blockchains were made for this. And so I think at its core, this technology is going to be really important. It's not ready yet. It's not. We've got things called zero knowledge proofs that are just taking off right now. We don't have digital identity really at a scalable way yet. But I don't know if it's 3 or 10 years because I'm just not that good of a technologist. I'm more of a macro, seeing where the trend goes guy. But I do know it's essential. And especially, I talked about this earlier, when AI comes on, like how are we going to have veracity around our data and ownership of our data? That's going to happen. Now, will it happen in a time fast enough that my investments make a fortune? I hope so. I don't know. But I know the end game is going to happen. So this isn't tulips. I know it can feel like it at time because it got so fluffy both in 2017 and in 21, and stupid projects had, huge valuations. But at its core, they're real technologies. I mean, even if you think about NFTs or how artists can use their creativity and store it digitally, that didn't exist before Satoshi. Right? There was no private property on the internet until Satoshi wrote the Bitcoin white paper. And so you had a feudal internet, right? Bitcoin was the first private property on the internet. You don't even have capitalism or freedom without private property. And so in a big picture world, this is a radical and important innovation. It just is going to take a while before it figures out how it fits into the current landscape.
2 last questions. You've been generous with your time. So a thesis, you're a tier 1 VC with a huge global footprint in terms of brand. And you invest in projects, and the combination of your brand equity and your capital and your ability to capture the media's attention creates a lot of heat and attention around this project. They launch a coin, they launch a token. It runs up in value because there's very smart people involved in it. And they immediately drop the bag, and they don't have to disclose that they're selling because there's a lack of regulation here, including no requirements that insiders disclose sales. Wash, rinse, and repeat, making billions of dollars but leaving just a trail of wreckage. Is that happening?
There should be disclosure requirements for early investors who own more than X, for builders of projects. I've said this for 7 straight years.
But let me back up. I think that's happening among the most famous VCs. They are literally using their brand equity and their capital for the ultimate levered pump and dump. Am I being paranoid?
I think it's probably happening a lot less than you think it is. And you can just tell by you look at Paradigm or Polychain, which were two of the best crypto VCs. They were by far the dominant two crypto VCs. And you look at their assets under management, and they've come way down, right? And so they might have sold some, but they didn't sell a lot. Otherwise, their AUM would have stayed a lot higher than it is. And again, I have said this nonstop that we need disclosure, just like you do. It's so much of what happened, even in the retail side here in the U.S. with places like Voyager and BlockFi and Celsius, where people lost a lot of money. They were investing in lending protocols where they thought it felt like you were making a deposit in a bank. Now, if you'd read all the fine print, you realized you were lending to an unsecured, company. It was broadly a poorly managed hedge fund you were lending to. I was public about it. Quite frankly, I spoke to the SEC chair before he took the job and said, this is important. This is where people are going to get burned. And people got burned there. And it was all about disclosure. And so the industry has done a shit job voluntarily disclosing things that should get disclosed. And the regulators haven't figured out how to regulate yet. And so we are in that, and it's funny because the industry does well by doing good, right? So if you've got decent participants in the Bitcoin community, you don't have these frauds and the price goes up. If you have malicious actors, the price goes down. And so you should self-police, but it certainly didn't happen.
So just to wrap up here, Mike, can you walk us through your macro outlook for the remainder of 23 and 24?
Yeah, I think we are going to have an economic slowdown that's pretty severe. Regional bank lending was growing at 15, 16%. Money center bank lending grows at about 1.5%. And so the growth engine for small businesses, for our economy, for real estate is regional banks. And they're not going to lend as much. It's just that simple. And that's a big hit to the economy. And so I think we have a credit crunch coming. I think there are tons of private equity companies that are going to have to grind it through or restructure, or, that this whole world was gorging on an orgy of low interest rates. And we haven't paid our comeuppance from that. And so I think the Fed will hike again, though they shouldn't. And then the next moves will be rate cuts. And we're going to have this weird world where we don't really get inflation low enough to meet the Fed mandate, but it heads lower. And it's going to be a very challenging environment. It's why I think gold and Bitcoin, do so well. Stocks I'm really confused with, because in some ways this is good for stocks, in some way it's bad. And so I could see stocks just whipping around, up, down, range trading. Right? What's good for them is the Fed has probably finished or close to finish their hiking cycle. That usually is a buy signal. But what's bad is we're going to go into this credit crunch. And there's still a lot of, in people's portfolios, every single person, including myself and my family side, got longer than they probably should have in venture and NPE, right? It just happens after a long cycle. And so you'll see liquid securities, even in crypto, you'll see Bitcoin outperform venture portfolios as those things have to finally get, restructured, digested. And so again, it's not a happy forecast, but I think it's pretty clear to me. I mean, I guess I could be wrong, and maybe the government can guarantee deposits, but I don't see the political will for that. I think the dollar is probably in some peril, not immediate peril, but we had a huge dollar bull run. The Fed's going to start cutting rates. And so you'll have a natural dollar sell-off. I don't buy into the fanaticism. I'm 100% certain that the peg in Saudi won't go, and that they will continue to be a dollar-based economy. Yes, they'll do more things to appease China. I I don't see China in the short run becoming a viable reserve currency of the world. I do think, their influence will continue to grow. But it's going to be challenging because also there are some structural reasons why inflation just won't plummet. Mm-hmm. Right? We're rebuilding supply chains. We're rebuilding for climate. Like those are all inflationary. And so unless ChatGPT really just dominates and everything becomes free, it's going to be kind of a bumpy road in inflation with a Fed that feels pressured to I think, stop hiking and start cutting.
Mike Novogratz is the founder and CEO of Galaxy, an investment firm focused on cryptocurrencies, blockchain technology, and digital assets. Before that, he was a partner at Fortress Investment Group and Goldman Sachs and served as a helicopter pilot in the U.S. Army. He's also the chairman of the Bail Project, a nonprofit working to combat racial and economic disparities in the bail system. He joins us from his office in New York City. Mike, we appreciate your time.
Thanks, Scott. Thanks a ton.
This video was produced by Patrick Warren. Olivia Rainey Hall is our art director. Sarah Shu is our animator. And George Carty is our video editor. Thank you for watching this edition of Prof G Markets. Please like, subscribe, and tune in next week.